Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
You start by verifying your Upstox Pro account has options trading enabled and sufficient funds. This avoids rejections. Once done, deposit the margin needed for the specific contract, for example rupee 10,000, and confirm real-time market data is active so you see live quotes. Make sure order types like MIS and NRML are enabled, and set up your preferred chart timeframes. Doing these steps now prevents delays when you choose strike, expiry, and place the first order. You next open the options chain, select the expiry and strike by comparing implied volatility, delta, and recent price action. This is where your thesis becomes concrete. Once chosen, decide whether to buy or sell calls or puts, or implement a spread for defined risk. Articulate target price and stop loss to maintain discipline. Make sure you confirm lot size, premium outlay, and Greeks, and check liquidity via open interest and volume, so orders execute cleanly at acceptable spreads. You now place the order in Upstox. Choose buy or sell, set quantity equal to lot multiples, and enter a limit or market price. Confirm order type like NRML for delivery or MIS for intraday. Once executed, immediately set stop loss and profit target, or use bracket/OCO orders to automate exits. This preserves capital and enforces discipline. If the order is rejected, check your available margin, adjust limit price for tighter spreads, and ensure markets are open before retrying.
Thanks for watching. Consider subscribing if I helped unscramble your problems.